Hello guys, welcome back to the channel. This is Hassan and I have another video about the same strategy. So this is another video about the same strategy, and it is going to be also a step-by-step show to how you can use our strategy. I haven't dropped a video since morning because I had no power, had no electricity, and my laptop was off, so I was not able to make a video. However, power just came back and I felt like I should drop the video for today. And just like I told you, this strategy works on each and every pair, except there is a pair called there are those pairs called AUD, NZD, IDSD. Yes, NZD also is there. Then there is the chef pairs apart from the USD chef. And then I saw on something to do with the card, but apart from USD card, it works. The only thing is that you don't have to consider wicks a lot, because almost of each and every candle on those pairs leaves a lot of wicks up and down, so it is hard for you to spot the right demand and supply zones. But with experience, you'll be able to do it. So what you do is you just look at where the big impulse happened, then that candle that happens before, that closes before the big impulse, that is what you use as your supply zone, because clearly that is where the decision makers came into the market and then they bought massively. So those are the pairs that I saw some challenge, but it is not hard. You can trade them. So this one we are going to go to. This is GBP NZD, just to show that we can try multiple pairs. This is GBP NZD. And this trade happened last week. So if you followed the same strategy on all these pairs, you were able to get that trade. Remember, the rules of the strategy are very simple. Just follow what you see, trade what you see, not what you think that price action might do. I know you've had many mentors tell you that trade what you see. Just follow the rules of the strategy. And this strategy is not 100% rewarding. No, just like any other strategy, you'll have losses. I've back tested and I've seen some losses, but however, those losses are avoidable when you're careful. Since this strategy is dependent on the rules, when you follow those rules carefully, you reach a point, if a loss is going to happen, you reach a point where you'll feel like, or something will tell you like, no, something is not right. And when you sense something is not right, once you're in doubt, take a step back and then zoom out, see what is happening. Zoom out, just go to the higher time frame and see what is happening. Or if you're scared, if you don't feel confident enough to enter the trade, just leave it. Just leave it. The market gives you a lot of opportunities. That means there is another opportunity that will come. Just have to be patient. Okay, so the strategy also has losses, but the losses are very few compared to the wins. So with a good risk to reward, you're good to go. Okay. Also, another thing is that when you are following the rules, if the strategy is saying that now the week has opened, we are tracking down and we are heading towards a demand zone, and you know that the weekly is bullish, the daily is bullish, and you know we are heading towards the demand zone, just know we are most likely to buy. So you enter with confidence, put a stop loss where it's supposed to be, and then be patient until it hits your take profit. Okay guys, so enough for the rant. We shall go straight to the charts. However, before I go straight to the charts, kindly subscribe, because we're on the road to 200 subscribers. So far we're around 180. Be part of the journey, be part of this amazing channel. I always post good content almost every day, so subscribe to the channel guys and be part of the channel. I'm just giving you only 5 seconds to subscribe, and then I take you to the video. Okay guys, subscribe. 5 seconds, subscribe. 5 seconds. Okay, I hope you're done. So let's proceed to the video. So we have sorry, excuse me, we have GBP NZD. This is the 1 hour time frame. Let's go to the weekly. GBP NZD, this is the weekly time frame. So we said, first things first, don't worry about these markings. I told you those are some of my demand zones that I already marked, just in case price tries to do the unthinkable, tries to retest down, I'm ready for it. So these markings be there forever. Why? Because you never know what price could do, and these markings will go up to 5 years from now. So I'm not marking this chart again. Whatever price wants to do, I will be ready for it. Okay, I only make adjustments. Price action sometimes it changes. I only make adjustments where it's due. Okay, so now let's go. Let's go forward. So what do you see on the weekly time frame? First things first, the trend of the market. What is the trend? This one is a very clear trend. You will never find a clear trend like this one. An uptrend. If you don't see this as an uptrend and you have I don't know, you have issues with your eyes, let me get for you a trend line, draw for you and see. You see guys, this is what we call a hyper bullish market, a hyper uptrend. Like, it is not even respecting the trend line because it's too bullish. You can literally draw like 4 trend lines for this trend. You see, I've drawn three trend lines for this trade, showing you that we are hyper bullish. So this is the easiest market you can decide the direction. So the direction is bullish, we are going upward. So that means going for buys is more important than going for sales at the moment. But that doesn't mean that we cannot sell. Yes, we can sell, but for here you first prioritize buys because we are in an uptrend. Okay, so now what next? We mark the previous week's candle. We mark the previous week's candle. We mark the closing price and the opening price. Remember, this week, this candlestick, this green candlestick here is the current week that closed. So let's assume it had not opened yet. It is not there. So this is the week here. You get? So this week is not there. Or let's put our blue line that we always put there. That one. Okay, so after marking it well, now we drop down to the time frame below, that is the daily for my case. But for you, you can use the daily, then 4 hour, then 1 hour for entries. So for me, I use the daily, weekly, daily, and then 4 hour for entries. So now when you come here, what do you see? And there, guys, something good happened. I'm going to show you. So when you come here, what do you see? You see a demand zone here. You see this demand zone around here? Yes, very clear demand zone. Let me just adjust this. You see a demand zone here, very clear demand zone. Bullish engulfing candle with a wick at the bottom, and then it shot up to there. So meaning when we come here, most likely this is where decisions will be made. The buyers are going to come in. Good. So now this is the daily time frame. So we go down to our entry time frame, which is the 1 hour or 4 hour, to refine the demand zone. So this one, it was a little bit tricky. You'd get people who would refine it to this candle here, this one here, like that. If you did that, you're likely to miss the trade by around 2 pips. But if you marked it fully to up there like that, you there is 0.5 pip miss there. That is now the problem, but I'm going to show you how to get around this. So the point is, now that you have marked your demand zones very well, you're preparing for the next week. So after, remember, this current week has not yet opened. It is going to open from here Monday. So you have prepared, our markings are here. So that means we ended here on this red candle here. That's where the week ended. So now it is Sunday and we are preparing for Monday. So what happens is, price opens from here Monday and it immediately starts dropping. When it starts dropping, what do you discover? You see these equal lows here, and then you see them as liquidity, which liquidity is leading to this demand zone. Guys, there would never be a clear setup like this one. You see a demand zone down, you see equal lows, which have, obviously they have liquidity under them. You know, this is a bullish engulfing candle and this is a supply zone. So we have people who have bought here, and then it is acting as support and resistance. If I can measure that thing very well, it's acting as support. People who trade support and resistance, this is like support. You see, price tapped, went up, came here, went up, came again, went up. Now it has come the second time. So you have people buying from here, putting stop losses below here. So price will come and sweep the stop losses, tap into the demand zone, which is the true area to buy from, and then shoot up like you saw. Hope you understand that concept. So now what happens is price opens from here. You see equal lows here, this low and this low, and you know that there's liquidity down here. Price starts going down. The moment it starts pushing down, you just prepare. You can set your buy limit there, or you can wait and enter manually, because you see it is coming down here. If it is coming down here, definitely it is coming to this demand zone, and as long as it comes to this demand zone with this liquidity down here, you expect a good reaction from this area. Are we together, guys? So if price taps there, it turns around and goes up. That is what we expect. So now this is why I told you, if you see a trade, take it. Do not hesitate, do not fear, do not have that fear and say, oh, now this trade, what if I lose? Provided it has met your setup, this is something you back tested and you're proven that it is working. So if you know that it is working, why do you fear? Why do you fear? You'll have like 4 setups, and then you lose 1 and then get 3, or lose 2. Okay, let's say you have lost 2 and gotten 2. Out of the 2, you have lost, let's say, $50. You've been risking 50 to make $100. That is 1:2. Out of the 2, you have lost 50, that is $100. And this one, the 2 that you've been winning, you have won 100, 100. Isn't it? That is $200. So what is the difference? Where is the difference? $100. That means you would have lost 100 and gotten 200. The difference is 100. So you'll be having a profit of $100 in 1 week. Guys, in 1 week, and that is for a small account. If you put it on a big account, that is $1,000 in 1 week. That is big money. That is big money. Okay, so let's proceed with the video. So price drops and reaches this demand zone. If you set a buy limit, this is the trick I told you I'm going to share with you. You have to, they always told you with demand and supply, put like 2 pips above the zone, and then the stop loss 2 to 5 pips below the zone. Anyway, depending on what you see, but for the entries, put like 2 pips above the zone, because sometimes if price gets enough liquidity from this area, it is going to barely touch the zone, and then it's going to shoot up like you saw here. So after touching the zone, barely, it shot up, giving you a 1:2. But don't worry about this 1:2, because as long as you have won it, you're not considering this 1:2 to whatever down there. You are counting these pips up here. How many pips were you given? Of course, the target was this opening price. Was it? Yeah, opening price of that previous candle. So that is 259 pips that you got from last week. 259 pips. So guys, I think you see how the strategy is very simple, step by step. You see this strategy, you do not need to learn a lot of things. You do not need to know a lot of terminologies in Forex. You don't want the only thing you need is you have to know the basics of Forex. What are the basics? Knowing candlesticks, what do they mean? How do they look like? How does a doji look like? How does an engulfing candle look like? How does a bearish candle look like? How does a bullish candle look like? What is the trend? What is the basics of an uptrend? What are the basics of ranging market? What is the basics of a downtrend? Only those ones. So you just come, add supply and demand, top-down analysis. Top-down is very simple, analyzing the market from the high time frame to the entry time frame, but interconnecting them. Simple. Then you apply supply and demand, you get precise areas of entry. For example, if you didn't have, like, for example, there are some mentors I used to watch that taught me top-down analysis. That is Dr. Williams and ZuaFX. If you look at, for example, Dr. Williams uses counter trend line for entries on the 4-hour. But now, even if price crosses the trend line, it doesn't mean that now, as long as it has crossed, it's not going to come back. It can cross, but still come back and retrace and put you out. But with demand and supply, you get precise entries. You know that since price is coming, this is where it is going to buy from. This is where it is going to buy from. So which it makes it very, very simple, because now you know where price is going to buy from. You set your buy limit there. Oh, when it comes and you execute manually. But I don't want that, because you can, anyway, it is still the same. You can execute manually, because what I was going to say is that you can buy from here and price first drops down here, put you into the drawdown before going up. So it is the same, because even if you put a buy limit here, price can simply try to play around this area before it goes up. So it is the same, but you know that this is the area that I'm supposed to be buying from. So if price closes below this area, then your trade is invalid, or the area is not invalid. Sometimes it is valid, but price action is price action, to always do what it wants. So now after doing that, that is now where you hold the trade to your target of the weekly time frame. Because remember, price can rotate around, but remember, it is always going to go up or down or sideways. So if it is going sideways, that means you're not losing anything. Let's say, like for example, tapped you in, your target is here, and then it came here, it started going sideways. You just wait. Whatever it does, it is going to decide either to go up or down. So if it decides to come down, you have already moved your stops above break even. If it decides to go up, it's going to hit your take profit. So either way, you're going to benefit. So guys, that is all. My videos do not take long, because they are straight to the point. They are straight to the point. Just follow the steps I've told you, step by step. And these are the videos that I'm putting out on the channel, step by step, guys. You're going to get the thing correct. This thing called Forex is going to take you for. If you don't have a strategy, this is a beginner strategy that you can use, and can also be a professional strategy. You can pick the strategy and add a few things of yours that you want. Yes, a few things that you think, if I add this, I'm going to be okay. However, for me, that is all that I have, and I think, I hope it has helped you. So guys, you can subscribe to the channel. Don't forget to like the video. Don't forget to subscribe to the channel. If you have learned something, please, you can share with your colleagues. And yeah, so you can also share with me in the comment section which videos you would want me to talk about, anything you want me to talk about, what would you want me to make a video about. Then I'll gladly make a video about that one. So before I go, there's also a mini trade that happened here, a trade within the trade. I think this is for the time. The traders don't want to go here. Yes, there. You see, price made, drop, base, rally, the big engulfing candle. So just mark it here, and then put your entries. Put your entries there above. You should be putting above as 51 pips. This thing can go high, 51 pips, and then target 1:2, 100. So as this trade was still running, it retraced and gave you another entry. You entered. So out of 250, you don't made 350 pips on this trade alone. So guys, that is all. Subscribe to the channel. Don't forget to like the video. Also stay tuned for the next videos. Bye. Don't forget to ask me anything. I'm always there to answer. This channel is still new, so that means I can answer all the comments that you guys send. I always answer all the comments. There's no comment on my channel that I have not replied to, because the channel is still new, so I don't have a lot of comments. I can answer all of them. Okay guys, that is all for today. Bye. Let's meet in another video.